Hello, I'm Donald Leggett and welcome to this edition of Share Views, brought to you by London South East. Our guest today is Jeremy Asher, Chairman and CEO of Tower Resources, the AIM-listed African oil and gas specialist currently planning the final stages of NJOM3 well in the Njonji field located offshore Cameroon. Welcome, Jeremy.
Hello, Donald.
Did you have a nice Easter weekend, Jeremy?
Very relaxing, very pleasant, just in the middle of all the busyness.
Fantastic. And now back to planning for NJOM3. So how are things going?
Well, we've got all the long lead items ordered and either at our base now in Douala or on their way. Services are pretty much all contracted. The rig is still in Gabon because it's chartered someone else and we have to wait for them to finish. And we still have a bit of site preparation work to do before it comes up anyway to Cameroon. But generally, I'd say we're doing well.
And how would you sum up progress so far then?
It's good. I think that the uncertainty that we still have over the timing of the well is because of the uncertainty of the conclusion of the existing charter. And as I say, there's still a bit of site preparation work to be done. But I don't think otherwise there's much in our way now. I think we're looking forward to getting the well spudded and hopefully getting to the test as soon as we can.
In your last RNS, you announced a $750,000 short-term bridging loan provided by Pegasus. Now, Pegasus is effectively you. So put that in context for us and explain what the money's for and why it's of benefit to the project.
Well, as we've been very frank with everybody, we do need to raise some money for this well and for the subsequent remainder of the phase one development. And we do need to get that in place over the next month or so because we need that in place before we mobilize the rig. When we raised our money back in January, we raised a little less than we'd have liked. It would have been enough to have got us through had we had everything in place and been working on the original schedule, which was to have the rig already mobilized in mid-April. But that didn't happen, so we need a bit more cash to keep us on schedule and to make sure that we're still in a position to go forward as soon as we have both the rest of the financing and the rig in place, which I hope will be in mid-May, second half of May. So that's to tide us over and make sure that we don't sort of down tools between now and then, but can continue to stay completely on track. Okay,
we're talking financing. So you're looking at all options. All options are in. Farm-ins, equity loans, bank borrowing, everything. So,
yes.
Who are you talking to and how is that whole process going?
Well, I can't say exactly who we're speaking to, but we're talking to both a number of people with whom we've had contact over the last year about the license, expressed interest in partnering, and some new people have popped up recently. But also with banks. We know that we're going to put some bank financing together at some point for the development as a whole. So the sooner we can bring banks in, even if it's only for a first tranche, the less equity financing we need to raise and the lower our cost of capital on the whole development. So bank financing is an important priority for us.
Is it a realistic option?
Oh yes, absolutely. I think we have contingent resources now and we'll have reserves immediately after this well. We won't be in production yet, but we're literally just putting in the infrastructure to begin production.
And your contingent resources, is that the 18 million barrels
yes, exactly. A day? And if you look at the reserve report, there's contingent simply on the development. So the the availability of bank financing, I think, is a given, and the importance of having it is a given. The question is when, at what point we can put bank financing in place. Now, in the meantime, sources of equity include our own equity, raising equity from our shareholders, and other people's equity. So I'm completely open to both, and we've been pursuing all these options for some time. The difficulty we have at the moment with raising our own equity is the stock price is low, and that means that if we raise money from our existing shareholders, we dilute anyone who doesn't participate in a way that I'd rather not do. So I'd rather bring in equity from outside until, frankly, the valuation of the stock, I think, is more realistic. So, but, I'm quite confident that we will have the financing we need. Otherwise, I wouldn't have put the money in.
This is a problem you have in common with other people in the oil and gas industry at the moment, and the AIM-listed developers. You're not the only person who's in this circumstance.
Well, no, we're not. I mean, financing is often a bit of a self-fulfilling promise, in the sense that when you're concerned about financing, it's harder to get. And once you have it, everyone says, oh, well, of course, now it looks great. It'll look great before you put the financing in as well. It's just you have to organize the financing. And we've been here before, and other companies have similar issues. But, it's one of the management challenges one has to face. And I'm confident that we will have the rest of the money we need for the well in due course. And then we will be needing more money beyond that. And that's why it's inevitable that over the course of the development as a whole, which is going to require 3 more wells, a platform and MOFU, we're going to need additional both equity and debt financing to do it in the most efficient way, from a capital point of view.
If you were actually to get NJOM3 drilled and successful, to what extent does that actually de-risk the project for all the other elements that you've been describing?
I think it's there is a de-risking, but it's important to remember that although there's exploration element to this well, in that we're going to get some additional data from the well from an exploration point of view, it's also designed as an appraisal well and a development well, in the sense that it's being designed as a producer. So it's all 3 at once, and the development aspect of the well, of course, doesn't de-risk anything. It simply makes us ready for production. But what we're still uncertain about is the performance of the reservoirs, the rate at which they're going to flow, because when Total drilled the first 2 wells, they did do some testing while drilling, but they didn't do a full flow test to surface, and they didn't test at all, even the natural lift. Didn't test the response to any artificial lift either. So that's one of the things that we're going to do.
Is this the first development well on Njonji?
Effectively, it will be the first development well. It's also an appraisal well, and it's also an exploration well. It's 3 things in one. But
so you will learn lots and lots of information from this?
We'll learn lots of information from it.
Thickness of the reservoirs that you're going through, all those sorts of things?
Well, that's right, because the Total wells were drilled relatively in the north of the structure, and close to the edge of the structure. We can see from the reprocessed 3D seismic the thickening of the structure as as one looks towards the south. But the resolution of the reprocessed 3D is still not perfect, and so therefore we'll confirm the amount of the thickening and the volumetrics. But also there are reservoirs which may be present in this area of the structure, which wouldn't have been present in the northern part. And so, there's an element of of potential discovery as well with the well. But if we don't find any additional reservoirs, we won't be disappointed. We'll be perfectly happy just to confirm what we've got and to get the flow test data and to have the first potential producer actually drilled, which will then allow us to move the contingent resources into the proven reserves category, and that in turn will help with the next stage of financing of the project.
In terms of risk, how would you describe the risk of this well? Low risk, medium-sized risk? Where does it fit on the risk scale?
Well, I describe it as low risk, but I should stress I'm not a petroleum engineer or a reservoir engineer, so I base that observation on the reserve report, which was published last year, which is on the website. So that's the Oilfield International assessment, and I would agree with that.
Very good. Okay, my final question. In terms of news flow, what do you think we've got to look forward to?
Well, quite a lot and reasonably quickly. I hope that in May we will finalise our financing for the well and also get news that the rig's ready to mobilise. From then, things will happen in quite short order over the ensuing 4 to 6 weeks. We will be getting to site and ready to spud, and then we'll actually have the drilling itself, and so obviously there'll come a point where we will reach TD and have some core samples, but then we'll also be starting the testing. Testing could take a week. We expect to have our annual general meeting before the end of June, and I'm hoping that we'll have something to say at that time, but it may well be that our annual general meeting falls just before we start testing, but in that case we'll have interesting news in July. Once we're past the testing, frankly, things will continue apace, because at that point we'll be sharing the results with Oilfield International and working to update the reserve report. We'll also be then working on the next stage of engineering of the project in terms of the jacket structure that we want for the production wells and the mobile oil production unit and so forth. So it's going to be a busy year.
Jeremy, that was a really interesting update. Thank you so much for joining us. So we give you Jeremy Asher, Chairman and CEO of Tower Resources. If you'd like to see more interviews like this, then do click on the London South East logo at the end of this interview. Thank you so much for joining us.